Alright, welcome back, fellas. Today, I am doing a video on the opposite of what I believe is going on. So, if you guys know, if you guys have been following along, what I've been talking about and what I think is going on and what my views are, okay? I believe that we are still in a bull market. I believe Bitcoin has higher to go, and I believe altcoins are going to go parabolic. That is what I truly believe. This video is going to be taking the opposite stance, okay? So I'm going to be sharing the worst case scenario that I think can play out and how I'm positioned for it and why you should also be positioned for it. Not because I think it's going to happen, but I just want to share you the opposite side. So just remember, 90% of you watching this are not subscribed. That stat is unreal. So go ahead, subscribe, like, comment, engage. If you like the content, obviously. If you don't like the content, you know, don't subscribe, don't like, don't engage. That's fine by me. Now, let's get into it. So, a couple of things I want to talk about. Now, let's look at Bitcoin. All right. Now, first of all, I don't believe this is a bear market. Okay. Out of everything I will say for the rest of the video, I do not believe we're in a bear market. But this is going to assume we are. Now, let's take the bear stance here. So, as you can see, I'm going to turn off global liquidity for this just so you can see a little bit better. Now, this is Bitcoin. Weekly chart all time. Okay, logarithmic view. Very, very beautiful chart. Okay, let me zoom out a little bit more. Very beautiful chart, right? And as you can see here, we're kind of in this like methodical, just stair-step, beautiful of a cycle, no parabolic run, no nothing, just a beautiful stair-step up. This whole way, you could see, like, look at these trend lines. They're not perfect, but look at those trend lines. It's a beautiful, just stair-step, methodical pattern. Now, first of all, when you see a long consolidation, upward consolidation like that, usually that means, look, I've been doing technical analysis for years, okay? The first thing I learned, honestly, this was like the first thing I learned, was when you have a methodical upwards consolidation, usually this means an extended bull market and an explosive bull market. Okay, we can see it with the S&P in past history. You could see it with equities. I'm not going to go into that, but usually that's how it works. Obviously, not always, but usually. That is one of the first things I've learned from TA. And that's what we're in right now. Now, obviously, this video is going to be showing why we're not going to go in an explosive parabolic run, but typically that's what happens. Now, let's say the bull market's over. Let's say this whole beautiful, methodical stair-step up to the 50, you know, just a beautiful, you know, stay at the 50-week and just move up is done. Let's say we're done. Let's say we're done. How far is Bitcoin going to drop? Now, let's look at previous cycles, okay? Because I want to show you what is interesting here. And let's go to the 2013 cycle. How much did Bitcoin drop from the high? Dropped 86%, okay? 2017, 84%. 2021, 77%. So, assuming that, right, let's say maybe we drop 70%, right? Law of diminishing returns. Let's say 70%, just for, you know, we're taking the ultimate bear stance. That would put us at around $37,000. 37,000. Okay? $37,000. Do you really think Bitcoin's going to see $37,000 ever again? Truly? Do you really think that? Do you really think that? I don't. I personally don't. And look, another really good indicator right here is going to be this red line. This is the 200-week moving average. So historically, in history, we usually come down, as you can see, to this is the 200-week right here. So we usually come down and we bottom around the 200-week, right? We saw it again here. We actually went a little bit below that this time, but usually we'll come and retrace down to the 200-week moving average. Right now, that's around 55,000, but you have to realize that this is a moving average, so this will extend up, and by the time we get into 2026, this will be at around 70K. So, if you believe we're in a bear market, right, we're probably only going to drop to around 70,000. And this would put us at a 44% correction. That's it. A 44% correction. That would bring us just around to the all-time highs of 2021. So it looks right there. And it's only a 44% correction. Now, why is it only 44%? Now, the contrarian view to mine, right, is that we're in a bear market, right? So, like I said before, usually when we get a methodical move up, we get an explosive rally, and we get an extended cycle. If that doesn't happen, right, we didn't see a euphoria phase, we didn't see, a huge retail pump, we didn't really see any of that this cycle at all. We saw a little bit when Trump got elected, but that's it. That was it. We didn't see anything else besides that. And that was here. My bad. I don't know what I was saying. But anyway, let's say we get like this stair step down, right? I mean, that's probably what would happen, because we didn't see I feel like the reason why we got these huge corrections in the past was because we had these parabolic runs. I mean, look at this, green on green on green, just weeks in a row. Same thing here, parabolic run. This was the run here. I mean, this was really the bull run here. This was kind of like the extended bull run, but still, you get the idea. That's why we had a large correction, was because we had those parabolic runs. We didn't get that yet. So if that doesn't happen, we're probably not dropping 70%. It's probably not going to happen. It'll probably only drop 40, maybe 50, 55, maybe. We wick down below the 200 week. That's what I see happening. And, the thing is here is, you want to know another thing that's interesting, okay? Usually, the first 3 weeks of the bear market is brutal, okay? It is brutal. If we are truly in a bear market, usually the first 3 weeks are brutal. As you can see here, 2013, we dropped 67% in 3 weeks. 67%. All right? 2017, we dropped 42% in 3 weeks. 3 weeks, guys. 3 weeks. 2021, we dropped 40%. Okay? And right now, where are we? We have dropped in mind you, this is 1, 2, 3. This is 5 weeks. Okay, not even 3 weeks. We have dropped only, we'll count the wick, 21%. 21% in 5 weeks. The 5th week hasn't closed yet, so maybe it does go lower. Maybe we're in a bear market and it goes lower. But I'm telling you, if you guys are a bear right now, if you're a bear right now and you think the cycle's over, you better be praying to bear Jesus right now that we get like a massive candle to the downside, because this does not look like a bear market, okay? Bear markets are usually sharp corrections after a parabolic rally. And, like I said, this could be a methodical bear market down. Who knows? Who knows, okay? And if it is, I think I might have a good reasoning to back it up. I think. Now, what I'm going to do here is I'm going to overlay the Fed, what? Oh, I'm looking at indicators. That's why. Okay, I was gonna say. I'm gonna overlay the Fed balance sheet. Oops. Let me rescale that. Come on, man. Okay, Fed balance sheet. Okay. Now, let's get rid of these moving averages, just so you can see a little bit clearer, right? So, Fed balance sheet in blue here. Okay. Now, one thing I have realized this cycle is that the Fed stance is kind of more important than I've realized with Bitcoin. And I think it kind of impacts a little bit more now than it used to, but I'm going to point out some things here. Now, as you can see, this is 2019. The entire 2017 cycle, we had a flat balance sheet or we were starting to decline, right? That's where we are now. We're in a quantitative tightening, and we have been tightening and reducing the balance sheet this entire cycle, And we can count it in 2017 because we were flat, and then we also did a decline. So let's count it here as well, right? We bottomed out over here. That was around here. Okay? We bottomed out around here. And right now, we're going to do the same thing. We're going to bottom out here. We're going to get quantitative easing soon. So the same thing is happening, okay? The same exact setup, right? So essentially, right? If we are in a bear market, I see it playing out pretty much the same as what played out here, where, as you can see, we didn't really get, how do I do dots, where is the, I think it's in here, yes, so we didn't really get a major downtrend. We had this little downtrend channel, right? And, what if that's what's playing out right now? What if that's what it's playing right now, and we get just like a slow, methodical downtrend down to the 200-week moving average? It's possible. It is possible, right? As you can see, same timing, and I compare this right here, this like chop and this consolidation around 100,000, trying to suck all the liquidity out of altcoins to stay above 100,000. Kind of similar to this, where we were just sucking the liquidity out of altcoins to stay above 10,000, okay? Now, I know this might sound scary because, okay, maybe it is the same. Maybe we are in the same exact spot in the easing cycle, right? And, we could actually have topped. And it looks very similar, theoretically, from this standpoint. Now, the thing is that I'm going to show you one more thing, is that I'm not really concerned about this, because I'm going to show you two more things, actually. First of all, the Bitcoin dominance chart, okay? I'm going to overlay that same exact Fed balance sheet that I did before. And what do you notice? As soon as we announced quantitative easing, what happened to Bitcoin dominance? It started going down, right? Bitcoin was going down, but dominance was also going down, okay? Dominance was also going down. Which means, let me show you the altcoin chart. Right here, I'm going to put this in a weekly, so we can show it a little better. Oh, that's not what I wanted. Okay. So, what happened? What happened to altcoins? This, as soon as we bottomed out and we hit quantitative easing, right? Altcoins started going up. We're not going to count this because this is COVID and that's a kind of a black swan event, but altcoins went up. They went up. They found strength in that period. And even though they didn't get alt season yet, they still found strength. And if you were holding altcoins right here, yes, the cycle was over, okay? The cycle was over. However, you were fine. You were completely fine holding altcoins because they were going up against Bitcoin. Bitcoin dominance was falling, like I just showed you, and altcoins were doing fine. They were a fine hold. And I think the worst case scenario is the same thing, is Bitcoin will have a slow, methodical downtrend. We will get, okay, right? It'll have a slow, methodical downtrend down to around 70,000, maybe a little bit low, 60, 70,000 to the 200-week moving average. We will get quantitative easing, which, okay, will cause dominance to fall. Maybe do this, right? Like it did in 2019, 2020. And altcoins will probably bounce a little bit. And they might do this, right? Even if we don't get an altcoin season, right? Even if that doesn't happen, I think altcoins right now are fine. I think that is the worst case scenario. I think the worst case scenario is that we don't get an altcoin season, but they don't really fall that much relative to Bitcoin, okay? And I think, yes, that might seem bad on paper because you might be stuck holding for a couple more years, but at least your bags won't go down that significantly against Bitcoin. Okay, and remember, the whole goal of crypto is to accumulate more Bitcoin, okay? So if you're stuck holding altcoins right now and Bitcoin's going down at a faster rate, that's fine. That is fine by me. That is fine by me. And, you know, it really brings the question on how much lower altcoins can really go. They really can't go much lower. They really can't. Now, personally, you know, I think it is cyclical inevitability for altcoins to eventually go parabolic. I think it's going to happen very, you know, sooner than later. I don't think this case is going to play out, but that is my worst case, okay? Like I said, worst case scenario, Bitcoin doesn't really dump that much. It probably, you know, this is if we're in a bear market, it probably would chop around 100K for a while before eventually breaking down and slowly, methodically, you know, dropping. But eventually it would go back up and we would see all-time highs pretty quickly, probably in 2027, maybe even late 2026. I doubt it, though. I doubt it. Probably in 2027. And, you know, in 2027, when we get a new Fed chair in 2026 and we start money printing, in 2027, I think altcoins would probably run pretty early compared to what they do, you know, in previous cycles. They would probably run pretty early because of this, because of the reasons I just gave you. So that, to me, is the worst case scenario in this market, okay? And, you know, if you're holding the large caps, Ethereum, Solana, even XRP, BNB, SUI, maybe, you know, stuff like that, I think you're fine. I think you're fine, even if they dump pretty hard. They won't dump that crazy relative to Bitcoin, okay? And I think the worst case scenario is we get stuck holding for a couple of years, but, you know, we end up making it out. Now, what can you do to position, okay? I think the best way to position for this is to just have cash on the sideline, okay? It's just to have cash, because at the end of the day, in a bear market, yes, you could DCA all you want, but you want to have cash to deploy on the bigger dips. So when you go back in history, and, you know, let's compare it still to 2019, because that I think is kind of the best comparison, even though it's not a bull run period. You know, it had a big consolidation, and then, look, big candlestick to the downside. You know, usually the big candlesticks to the downside is when you want to buy. You know, you saw it here. Here. You saw it, obviously, here. You know, big candlestick here. You know, if you're accumulating on those big candlesticks, you're fine. And I think a dollar cost average is fine through a bear market, but you want to have cash on the sideline. And personally, what I'm doing with my portfolio, I've showed you this, guys, in the last update, but if we'll load, I have just about $100,000 here, and my largest position is SUI. My second largest position is cash, okay? As you can see, I have $14,000 in Tether, USDT, and I have $5,600 in USDC. So I have almost equal position, you know, almost 20% of my portfolio is cash, okay? And I think that's a really good rule. Personally, I would like it kind of more at 30%, you know, considering how deep we are into the cycle, but wasn't able to get it there so far. We're sitting at 20%, and I'm fine with that, because, you know, once at the end of the day, if we're in a bear market, I have this $20,000 to deploy when Bitcoin is at 60, 70,000. That could be a quarter of a Bitcoin almost, you know, maybe even more, a third of a Bitcoin. Plus, if I'm able to stock up more cash next year in 2026, which I will, you know, I can maybe buy a full Bitcoin just with the cash position. So you know, that's how I'm playing it. And like I said, worst case scenario, I would hold Sui, I would hold my Ethereum through the bear market. I would, because in my opinion, I don't think, if we're in a bear market, I don't think it would be that brutal, especially for altcoins. Because like I said, we have QE coming, the Jerome Powell money printer's turning on, we have rate cuts. Like, I just don't think it's an environment for a crazy correction like we've seen before. Because you only get those corrections because we went parabolic. Okay, that's the only reason. When you don't go parabolic and you don't have max euphoria like that, you know, you don't have a reason to really dump that hard. You just don't. And that is the worst case scenario for me. Okay, so worst case scenario, we hold for a couple more years and we buy Bitcoin next year, and that's what it would be. But you know, like I said, it would give us a really good position for altcoins, give us a good position for everything else, and we'd be fine. But like I said in the beginning of this video, I do not think we're in a bear market. I really don't think so. I think Bitcoin's going to 130, 140, 145, $150,000 plus, maybe even 160, 170. But you know, we'll see. The whales need exit liquidity. They're not done. They're not done. I really don't think they're done. I really don't. Especially with all the conditions I just told you guys. I don't think we're done. I really don't. But that was my view here. That's all I got. And if you guys like the video, make sure to subscribe, make sure to like, make sure to comment what you want to see next. Make sure to do that. And that's it. I'll see you guys in the next. Peace out.